Yeah, what are the drivers for the gold market right now, for the gold price? I mean, it's actually easier to talk about what's not influencing the gold price than what's influencing the gold price. You've got economic issues like low interest rate environment in the US dollar. You've got negative interest rates in the Eurozone, in Switzerland, in Japan. You've got quantitative easing just being expanded by the European Central Bank, so the printing presses are running even faster and for more. You've got generally a gloomy outlook for growth on a global scale. You've got China, which is slowing down in industrial production. And you've got various political issues which are in the pipeline for the next 6 to 12 months, be it the UK referendum on Brexit. Nobody really knows how that's going to end up or what's going to happen if the UK decides to leave. That might actually lead to the European Union being in a complete crisis and crash. Because if the first one leaves, who isn't to say that a second, third, or fourth country mightn't consider leaving as well? You've got the Eurozone. Sorry?
No, I was getting more and more depressed as you sort of reeled off all the reasons why gold is going to go higher. But let Richard jump in on this. Richard?
Hey, I mean, Patrick, all the things you say explain why prices are up compared to maybe the start of the year. But it's really the last month that puzzles me. When you've seen a risk asset rally, you've seen expectations of Fed rate hikes getting put back into the markets, and yet the gold price has gone up. I mean, it seems to be at odds with a lot of the other financial prices that we've been seeing since the middle of February. Why do you think that would be?
Well, it's a good question. I think market sentiments in general have changed. I mean, if you look at the gold miners index, for example, it's up over 40% year to date, the GDX. So, I mean, obviously, people are investing in gold miners, and they usually wouldn't be investing in gold miners if they think the gold price is going to continue to fall. We also see a general trend here in Hong Kong, let's say, for Asian demand. If you're sitting in Malaysia, if you're sitting in Indonesia, if you're sitting in Vietnam, your currencies have gone down by what, 10, 20, 30% in the last 12 to 18 months. So you have a lot of demand in those countries for physical gold. We also saw in the post-Shenzhen and Shanghai stock market collapse that demand spiked. People are starting to pull out money out of the stock market and putting it back into physical gold. So I think market sentiments have changed quite a bit, and I think that's what's driving the gold price. And if you put also your focus on the supply side, more and more bullion banks are pulling out of the bullion trade as such. So on the supply side, you've got a decrease in supply. On the demand side, you've got an increase. And you know, I think it's quite natural then that the gold price would go up.
But, okay, it sounds a lot like 2009. What happened then? I mean, gold was like incredibly popular during the depths of the crisis. Are things different this time around, and if so, how?
Yeah, well, I think it's not as bad as 2009 right now. I mean, things could get worse, but what we definitely see is that the general public is buying up precious metals, and it's not only limited to gold. I mean, you know, the American Mint has been selling silver eagles at a breakneck speed. 2015 was already a record year, and year to date they're up 25% on their silver eagles. So, you know, there's obviously a demand out there, and that doesn't seem to be abating. In actual fact, what we're seeing is that the demand from China is even increasing. They've been a little bit quiet the past few months because the state has been busy propping up its capital markets there and putting 1.5 trillion yuan into the stock market. But now what you see is that abating and the state coming back as a big institutional buyer, but you also see that more and more people are starting to buy it. Will it be as bad as 2009? I don't think so, unless Brexit really happens and if the Eurozone doesn't sort out its banking crisis. If the banking crisis reignites in Southern Europe, I mean, you know, Greece is still bankrupt. The Italian banking system is in a shambles. Portugal could be doing better. Spain has improved a bit, but it's not great. So if that reignites, I think, you know, you could be back in the 2009 situation.